My name is Kat, and I'm here to answer your business financing questions.
Unsecured loan versus secured loan. What are the differences and why pick one
So,
over
the
the
main
other?
difference of an unsecured loan versus a secured loan is the level of security. So, an unsecured loan is based on your strength and performance of your business. So, they'd look at your credit, your financials, your industry, how you're trading. Whereas a secured loan, they would look at the assets that you're bringing to the table. So, typically, it'd be secured against property, commercial, or residential.
So if you're like a smaller company, would it be a more unsecured loan you'd be going for because you don't have them
Potentially. So
assets in
you can
place?
use your personal assets. So if you're a homeowner, you can use that property to
Okay.
secure the business loan against.
And is there like a difference in values? So can you get more money for secured
Yeah, so it
loans
depends on
compared
how
to
much
unsecured?
equity you've got in the property. You can get a much larger amount. The main differences are the cost of credit. So on a secured loan, it is much cheaper because you'll be able to get much cheaper interest rates and a longer term as well, similar to like a mortgage that you might get on a house when you was purchasing that. Whereas an unsecured loan, it is more expensive.
Yeah, perfect. All right, moving on to our second question. Can I get a business loan from a startup with no revenue coming in yet? So let's say there's like a younger person, let's say 18 for argument's sake, just started a company, wants to get a startup loan, doesn't want to go the venture capital way, he doesn't want to give it away any of his company. How easy is it for him to actually get a business loan?
Short answer is yes, they can, but it's not the traditional route. So usually with the lenders that we work with, you'd need 3 months of trading. So we'd need to assess 3 months of bank statements. So if you're pre-trading, brand new startup business, we'd need to go through a different route. So it's typically a secured loan, like we spoke about on the last question. So they'd need to use property, something tangible
Yeah.
there for the lender to have their security attached to because there's no trading history or performance.
And who do they talk to? So they talk to someone like you, but can you say who
Yeah.
you are and kind of what you do and
Yeah,
why
so
they
we're a
go with someone
finance
like you?
broker. So our job is to make sure that we're matching the client with the best possible options. So we work with a panel of lenders that's across high street banks and the alternative market and challenger banks as well. And the whole idea is that we know the market better than the business owner because their specialism is in their business. Ours is in the market. And what we're looking for is the lenders that they're going to be matched with, the most suitable options for them and the ones that are likely to approve them.
Moving on to question three. How do I actually get a business loan?
It's really straightforward, but people often overcomplicate it. So, what you'd need to get a business loan is if you're speaking to someone like me, we'd just need to have an initial conversation to understand your business, what you're looking for, how much you're looking for, what the loan is for. And the information that the client would need to provide is business financials. If you're looking for an unsecured loan, we just need to have business bank statements and your financial accounts if you have them. And if you're looking for a secured loan, we'd need to have the property details, what we're securing it against, how much equity it is, and the address. There are a few other bits and bobs that we'd need, but we'd collect that on the phone. And then our job is to actually go through the process and do the application, match you with the lenders, liaise with underwriting, and get you that offer. So, from the client's perspective, it's really straightforward.
And is there some like industries that can get loans
Yes.
easier and some that can't? Like that are like harder to get. So some can you give us an example of a
Yeah.
business that could get a loan easily? Like a small business and a small business as well that would struggle.
We're seeing the struggles are in construction because it's such a high risk industry because of payment terms, delays, people
Okay.
liquidating companies and phoenixing them. So it is always a high risk industry, but we've got lenders who can support that. But it is just
Yeah.
a little bit harder sometimes. An easier industry, or easier, um, is like a
Yeah.
convenience store. It's always a great one because they've usually got high turnover, they've got constant revenue coming in, and there's a lot of options for them as well. So retailers, convenience stores, hairdressers, high street shops are really good to get finance for.
You said something there about phoenixing the companies.
Yeah, so that could mean, say for example, you have a business and you owe people money, you liquidate the company or you close down the company and then you set up another company that's basically exactly the same to get. Yeah, so you might
The
set
same
something up
thing.
that's Harrison Limited, and then you've closed that down, and then you've set up
Yeah.
another one, Harrison One Limited. Yeah, exactly. It's the
H
same thing.
Limited.
You're just trying
Yeah.
to get away from your commitments that you've been bound to. Yeah.
And
And
all the debts, and you're kind of
yeah,
closing them
exactly. And
off
in
sort of
construction, that can
badly.
happen quite a lot. And obviously, people are out of pocket.
It's surprising because when I think of instruction, I
Yeah.
just think of big money. Because you see these big like developments, and I guess you don't really think of there is probably a
Yeah,
lot more
it's a
smaller, dodgier
huge market and it is a
firms out
huge
there.
portion of what we do. We do support a lot of construction businesses. It is probably over half of what we do is construction of some sort because it's such a large market. But there can be a lot of fraud and high
Yeah.
risk clients out there.
Moving on to question 4. What's a realistic interest rate for an unsecured business loan today? And how much does a credit score actually change that? So the personal credit score, to what extent does that affect the unsecured interest rate for a business loan?
So the realistic interest rate for an unsecured loan can be wildly vast between different businesses. So you can get something that's around sort of 5% per annum for a very low risk business, well established, great turnover, profitable homeowners. And then you can get something that's on the other end of the scale that's for a brand new startup that's got poor credit, perhaps in a higher risk industry and loss making. The interest rate is determined on the risk of lending to that business. Credit score, a lot of people don't know this, but their personal credit score really does impact on their business finance loan because essentially you're the person behind the business. If you've got poor credit, that doesn't give the lender much confidence that you're going to be able to repay back that loan or you're not going to miss payments or default on their loan.
Interesting. So can you give us an example of a bad interest rate and an
Yeah.
example of a
So
good
on an
interest rate?
unsecured loan, I would say a good interest rate would be something that's around the 10% mark per annum. That's very low risk. Before COVID, you'd get something that's around 5% easy. After COVID, everything went mad, and around 10% is considered a really good loan rate for an unsecured. No, it's
10% is
not.
high, no?
So, no. So,
Is that
on an
not?
unsecured loan for a business loan, that is
Wow.
really competitive. Um,
Yeah.
Something that's much more expensive. It could be a shorter term facility and it could be something around sort of 3-4% a month, sometimes 5 if it is a really high risk deal.
Wow. And for credit score, now for people who don't even know what a credit score is, can you just explain what a personal credit score is? Yep.
Personal credit score is basically a report that's made of your personal credit. So it's basically loads of information that's determining how risky you are to lend to as a person. So it could be things like your mortgage payments,
Yeah.
how many loans you've got, how much usage on your credit card, how often you're paying for finance like the Klarna and the 0% interest. All of those things are collected and gathered up, and that's gives you a number that's how risky you are to lend to. So if you're missing payments or you're behind on a mortgage or you've got a lot of debt on your personal side, that will make you much riskier compared to someone who's more cautious on their personal side.
Now, on to our next question. Are there legitimate ways to negotiate rates or terms on unsecured loans? Or is everything fixed because of the risk level?
So I would say yes, you can negotiate. So the reason that using a broker is such a good idea is because we've got the relationships with the lenders, we've got the knowledge, we know what is possible to do. So if you're using a broker such as myself and you've got a loan that's offered and something doesn't quite work for you in your business, then we can negotiate terms for you. We can try and get it structured in a way that's going to be much suited to your business.
What realistic financing options exist beside unsecured and
So
secured
many.
loans?
There's so many options out there, and unsecured loans are the one that people usually gravitate towards because they're not clued up on the other options that are available. So you've got asset finance, you've got secured loans, merchant cash advances, invoice financing. You've got so many different things there that we could look at.
Perfect. And to wrap up, what is the number one mistake entrepreneurs make when looking for unsecured financing?
The number one mistake is easy because I see it all the time, and it's applying for a business loan, plastering your application everywhere, throwing everything at the wall and seeing what sticks. Because most of the time, if a client is going to the market themselves, they're just going on Google or going to their bank, and they haven't really got a firm understanding of what they're eligible for. They're just seeing whoever's sponsored business loans or whatever it may be on Google, and they're
Yeah.
applying. And a lot of the time they're applying for something they're not eligible for, or they're applying for something that is far more expensive than what they're actually eligible for as well. So it costs them so much. That's why using a broker is such a important thing to do when you're looking for business finance, because we have got that market knowledge.
And where can people find yourself?
LinkedIn. So we're an Essex-based business. So if you're local to Essex, you can come and say hello and, talk over anything business finance related, or go onto our website, one-finance.co.uk.